Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan is working on the market outlook for the week, which will be coming out later today. It is November 20th, a little after 2 p.m. here on the East Coast. Let's get rolling with the trustee disclaimer. And also now we will move into the intellectual property rights notice, and then I'll shift the screen and we can get started. All right, I think that's about enough of that. So if I can shift the screen over, new share to screen 4. There we go. All right, so we'll start out on this screen, and let me just apologize in advance because this is probably going to be just macro measure highlights. It's probably not what I would do in a normal week, but I've been, I guess, like a lot of folks out there, I've been playing rope-a-dope for almost 3 years, I guess, and somehow with all of my kids and my wife and everyone catching the COVID, I somehow was able to bounce off the ropes and avoid it here and there, not really get tagged by it. But I got caught with a nasty uppercut, I guess on Thursday or something, or at least it started kicking in on Friday morning, and well, actually Thursday. And I've been out for the count for the last couple of days and trying to get my wits about me. Fortunately, Ryan and Pearson and Greg were able to take care of things in UOA land and so on and so forth with Rebel Pit, the way I try to help out in those services and other things on Friday. But I didn't get a chance to observe the markets live, and I kind of feel like I'm coming out of some kind of a fog, I guess. But to pick things up, I think we left off last week with the conclusion of we were overbought. We thought the markets most likely would need to pull back a little bit and then see what happens and go from there. And it was a little tricky. It didn't really do much on Monday in the SPY that we use as our proxy, main proxy for the market. And then we did have an attempt to rally Tuesday that was met pretty significantly with selling. And then we got that little pullback finally the next few days, and it didn't last very long, right? They pulled back towards the confluence of the 10 and 100 right there. Both of those are basically white. On the SMAs, excuse me, I kind of feel myself potentially rolling over here, so I better get going on these videos. But excuse me, so bounced up to the 150 there on Thursday in Rust, and then managed to come through, but then sold off, right? Come through, back through there, but sold off. So really, if you think about it, right, this was a week that is probably overall healthy for the bulls, but I don't know if they could really do a lot of celebrating. If you look at the close on the prior Friday versus the close that Friday, you were down a little bit, but I would call that constructive at this point in time. I think we're actually back where we were again at the end of last week, where we were going to expect a little bit of a pullback, see what kind of news develops, mainly PPI and some earnings reports, and then see how the market goes from there and then trade it. And that was really where we were. Now I think you're back in a similar situation where you may as well wait, see if they can start to move things back up. Then it would be easy to really put a new closing high together respectively, because you're not that far away from doing so, right? This high here, the closing high for that day was 398.51. Closing high here was 398.49. So you can see where you need to be. It's right near there. And if you get to 399, you close there, that would be an improvement. And that would be nice if you're a bull, right? Having had this big, well, it goes back to here, but this big surge that's sort of then started to stutter step its way up still. Got the nice little pullback there, deftly handled as usual by the operators, right? They put a nice little maneuver together to create this, and then they held it and started pushing again. But then there was a lot of talk about OpX and how much came off the books, and how much that affected the action. And that's why it's getting so hard. Honestly, I mean, we all love options, obviously, at Market Rebellion. I wouldn't use anything else. I mean, I don't know of anything better. But with all the options activity, which is great, it's great for liquidity. It's great for selectivity and things like that. It does create these days where you're not really sure what to believe. And now we're coming into a week where we'll have the major US holiday, which they typically rally towards, right, in major US holidays. But you've got really big news before that. So let me shift this over so we don't have to switch screens. But we have to be cognizant of this, because we've seen that, the developing news can impact charts. In the end, it may all not matter. The chart may be on a course for some sort of predestined area. I don't know. After all these years, I still don't know. But eventually, there's at least an initial reaction you have to take seriously as a trader, right? You can't really, unless you're really long-term oriented, at least longer than swing trade orientation, then you're talking about, you've got to react to these things because it can really impact your short-term trades. But some pretty big stuff happening with the FOMC minutes. This is right before the holiday too. And it could be thin, right? It could be thin. You've got other pretty big stuff happening that day, right? With PMI flash, consumer sentiment, Michigan, things that people take seriously, durable goods. So you got Jerome Powell. This is probably the week, right? What happens on Friday, it's an abbreviated session. Of course, nothing will happen on Thanksgiving. So this is it. I mean, it's really light until we get there, but this is, the Fed speakers and other things, it definitely impacted the markets. And that's where I think you are again. And sometimes everybody wants, I always note this, but everybody wants to get really definitive and make calls. And I'm just not part of that school. I try to do that when I think it's there more so. But, I think this is a time where there's nothing clear about what to do at this immediate moment, where you should say, I could say, well, yeah, this looks pretty good to me as I see it right now. And how can you really argue with these upsloping SMAs? How can you really argue with some would argue, and I'll kind of just trace it out without really tracing it out, but some would say there's an inverted head and shoulders forming in the SPY. Maybe it's compound inverted head and shoulders, but whatever the case may be, some are going to argue that they see that there, and I wouldn't disagree with them. And I think we've been saying that we've had to give bulls the benefit of the doubt for some time. And overall, I think we've been right to be cautious about fighting against what they've been doing. And we've seen what's happened with some of these sectors and some of these commodities and rates and the dollar and so on and so forth. So I think our caution's been well-founded, and it's been prudent. And I think it's paid off, at least not getting ourselves in trouble, because this is a very significant rally, especially in the diamonds. We can go back to there, go over to the diamonds, shouldn't say back, but over to the diamonds. And this is obviously a very significant rally that they've had, much like we've seen other significant rallies. This is no small thing. I'm not saying I'm flipping to long-term bull. I'm just saying I think you have to respect this and the seasonality, all the things we've been talking about. And I still don't see anything that's cracked yet. I don't see any massive problem on the charts where I would say, oh, look, this is super overbought. No, I don't see that. I've got an RSI reading off screen at 59 right now on the SPY daily. So that's not, that's nothing extraordinary. I would look at it this way. I think if you fail to hold the 10-100, which is effectively the low of Thursday, that's when you would start to say maybe they start to favor closing this gap right here. That's what I would start to think of. And of course, that might not be so easy with these rising short-term SMAs, especially with the light blue 20 SMA right there. That might make it hard. 20 can be pretty substantial at times. So That's not easy, but remember the seasonality. I still think that the odds favor us trying to work our way towards that 200, towards some of these other lines I've got here, some of these other fib areas. We did say that we did catch this 50% retracement on the whole move. We talked about that last week, and this was sort of an interesting tell. We noted at the time that if we don't fall all the way down to the this side of the expanding channel we've been in this year, it could be a little bit of a nod to the bulls, and they seem to have taken it that way and worked with it. And right now we have to acknowledge that they're holding things together, and I'm not convinced that they're going to be able to pull it off, but I have to respect the fact that so far, right, they've been able to hold this all together. And I think some of the news hasn't exactly been all that great. And so I always try to keep mental notes on that when the market shrugs off news that I think should have had more of a negative impact, or conversely, in a bear market when it should have had more of a, in a bull market when it should have had more of a bearish impact, and it doesn't. You get the idea. I'm still a little cloudy. It doesn't follow through, but the way you'd expect. But anyway, getting back to this, so I'm still willing to be open-minded right now. I mean, I think that makes sense given that this trading range has been somewhat of a narrow trading range. And I always look at it and say, well, that's not advancement. That's my first thought. And you're a bull, you want to see advancement. But at the same time, you have to respect working up through these SMAs above flat lines methodically, holding them, backing up to them like it did here, and then holding them and then moving up. And then these shorter term SMAs come up to support them from higher and higher levels as well. So they're only one SMA away from taking them all, and that's the 200, just like it was last week. But I think you just have to say, I'm willing to trade this in both sides. The real crack, of course, would be this line that I've got in here that I'm hovering over now. That would be the real crack of this, much like we could put a line under this action back in here. And then, of course, all you have left is the 50 at that point. And the 50 would be the last thing I'd really look at, other than some flat lines and saying, this thing's in trouble. So right now, I'm looking at it saying, I'll be open-minded about it. I'm not really super definitive about things right now, but I'm going to give, if I had to, I would give the nod still to the bulls, because they still have higher highs and higher lows intact, and they're holding support. They held support here very clearly, and they bounced it. And we'll see, right? News can change everything. I always talk about a news neutral weekend. I have no idea what's been happening. I've really been out of it in the true sense of being out of it, just completely. I'm half awake, half asleep during the whole process. So I hate to belabor that, but I just don't see anything. I have to respect some of the bullish things that are happening here. I don't see anything yet. There's no crack of support. You might have a lower high on a really kind of micro basis here. If we roll over, that would be something bears could work with. But until we start taking out this low, that's not really something that I'm going to pound the table on, right? So it's just not there. And that's okay. And the reason I say that is because many of you have probably heard me say this before. In my experience, when you can't find a really strong lean, that's telling you to be patient. You're probably right. Unless there's news, right? And then that can change things. But if you don't see a strong lean, that's telling you just be patient, because you're forcing it at this point, right? So everything here looks primed. This could, you could look back and say, well, I think that's distribution happening up there. The market's going nowhere. There's been a long run. It's up near prior highs. It's got the upper Bollinger Band there. I get that. I wouldn't disagree with you, but there's still a lot of decent things happening underneath. So I think we have to let the market tell us what to do. And it could be a week where where you get lured into things, right? It could be one of those sort of silly, in the end, kind of bewildering, meandering types of holiday weeks. You just don't know, right? That's the thing about holidays. You want to say, well, they're listless and boring and don't even bother. But sometimes they're not. That's why the market's always the market. You've got to be on top of it. regardless. And it's easy to get lured to sleep, but I could say the same thing here. Very easily the diamonds could make a new closing recovery high on this leg up. And I think overall you could see that, right, that you can see, I think that the volume overall, there's been higher volume transacting here than we did see on these other runs. Look at that right there. So look just from this run here, you can see the volume totals. I think they've been committing more here. So this is one of those times where I don't necessarily violate my modern take on volume, but when I notice little things like that can be difference makers, I think this can be a difference maker too. So I just wanted to share that as well. So there's a couple little tricky hidden things that these sneaky bastages have got in place that you have to, I think, respect the bullish potential. Not that I'm a bull. I'm just saying at this point, if I want to see, like, if I really think the bear game is on again in the short term, I want to see really at least something get cracked. But look at this. This is what I'm saying. When you look at this possibility of, some people are going to say this is kind of a messy inverted compound head and shoulders. And if that's the case, you know, that could, people that are pattern players are going to see the potential there. People that don't believe in patterns won't care either way, but you just got to give it its due. As of right now, though, this is how people get frustrated, but I would be happy to flip right around, right? In other words, like, if this doesn't make it up a little bit further the way you would expect it to kind of keep that nice, not really symmetry, but nice picturesque form up towards the 200 or up towards some of these resistance areas or up towards this other fib where there's a flat line basically as well, then you'd say, well, that attempt to rally really stalled prematurely, just like the sell-off stopped and reversed here. And then you'd say, this is problematic because this shouldn't be happening with the seasonality, blah, 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 blah. But this is truly a tough call in my book. And that's why I think you wait to see what happens. And it might be hard to trade even so, because Powell and the minutes are late on Wednesday. A lot of folks could already be on their way towards their Thanksgiving destinations. And then you've got this light abbreviated session on Black Friday. So it is what it is. Sometimes it's just not anything special, but I just see that I think bulls are sneakily still in control at the moment. And that's, of course, without knowing what news is lurking out there for over the weekend or Monday morning. Let's take a look at the Qs. This is the big laggard, right? If they get the Qs going, this could be the big catalyst to help the index prices really lift. And I think it would astonish people. It would astonish me, sort of, but because I always get astonished when I think, just like most people, this makes no sense. But I learned to not trade what I think and just try to listen to what the charts are telling us. And this is what lies to me the least in this world of trading, or is the price action and all the other stuff associated with it. So you have to give them their due. They've got some crosses going. I'm not a big cross player for timing, but it is an important positive development. And you could see that this trading range that they've been working into, they've got higher low put in here, right? So if they start to take this above the 100, and it would be easy to get a new closing high here, right? All you need to do is take out that one right there, 289. And so I don't know what could spur this. I'm just saying, I'm just making the devil's advocate argument and being objective, that we have to be respectful of that. And then don't know if it's easy sliding to get through the 100 and white, the rust colored 150 from there, if it even does that. But again, I think it shouldn't be easy unless there's real serious news, which could be Powell, could be the minutes, could be both. But you have a lot of SMAs to drop down through to fill this gap, this very obvious gap. But right now, if they kind of take this nice little pop and this nice little pullback and work with it, I think that projects up towards your 200 as of now. So I think cyclically, when I look at all the stuff that I like to look at, I think overall I have to give the nod in every index ETF slightly to the bulls. Like if this were a fight, prize fight, then I would say the bulls are the bulls are outpointing the bears at this point. There's no knockout here, but they're slowly and methodically outpointing them at the moment. And that can, just like in boxing, things can change quickly. But even here with IWM, all these things kind of delivered in a way what we thought. And see what happens, pull back a little, take the overboughtness out, and then see what happens on the news, and maybe we get a pullback and then see how they react. And they did, and they're trying that. So I think you've got to be cognizant of that too. But this is all interesting. I mean, I think this is very interesting chart stuff that I would love to spend a lot of time on. And this is the kind of stuff where you got a real battle on your hands. You can look at a lot of different things. And so let's bring a few more things in that maybe will help put it in perspective for us. And that's what we've looked at before. So this has been something we've looked at for most of the year. And you could see that we got up into kind of a zone up in here, a level this has preceded some corrections, right? So that's interesting. And that's your percent of stocks above the 20-day SMA. Now we'll do it 50-day. And this too is up on the high side. So, right, things aren't really super overbought in most places, but at the same time, you have to respect this too, right? So this is why this just keeps, this is when I sat down here far too many hours ago to try to get a little prep in and catch up. I feel just so cloudy right now that I'm not really all there, I don't think, but I noticed, there's just a lot of things that are sticking out that are really interesting. And that you can make it, what about this? What about that? You can kind of go back and forth. And that's what I do really, is just look at I like to look at a lot of different things and then say on balance what I think. And then sometimes you notice little nuances or little deciding factors that can tip the balance for you. But this would have to give you some caution, right? So I think the seasonality is that you do tend to get a little tiny bit of a pullback, I think, and then they start towards the end of the month, and then you start ramping up into mid-month December, I think. So that's that. Now, one other thing I'd like to do before we move on to a few other things is I'm going to drop in the chart of the largest market caps for us, so we can take a look at how everything looks as a package, because as Ryan tries to make the case as much as he can, these stocks are the heavyweights, and they really as a package, their weights are really a big deal, right? In terms of where we go from here type of a thing. So we'll include Tesla and let's see what we get here. And I found this to be interesting because if you notice this is right away, it sticks out to you that there's a possible higher low being put in here on this package deal. And so this is, if you want to keep track of that, just go with Apple, Microsoft, Alphabet, which is, you could do Google or whatever, Amazon, Berkshire, and Tesla at this point. But these are the big ones. And Tesla, I have to include, if you're wondering why 6, not 5, I think you have to include Tesla. Kind of the psychology of the whole Tesla thing warrants inclusion in my book, but to each his own, to each her own. And but this has got the higher low put in. Now, if this whole package starts to work its way back up, and it coincidentally takes out that opening, which will be probably just about where the 50 is, then it starts opening up more room for itself. And if these things start to work towards where I think they can go as a package, that's obviously going to help the indices really strengthen. And I think that would be surprising. It would be, just if I think about it in terms of how that juxtaposes with the current economic landscape domestically and globally, but I've seen this act too many times to say that it can't happen. So that's just my little warning there on if they get this thing going, because I looked at this too, and let me just move something out of the way. And with a little bit more work, they could flip a lot of cyclical stuff in their favor here with just a little bit more work. So it's not all there, but if they start to move, I think you've got to keep your eyes on those stocks, because, or this package, whatever, however you want to do it. But if they start to really juice those things, that could really seal the deal for the market for most of the rest of the year. So just keep that in mind. I better start wrapping this up because of how I can tell I'm starting to slide a little bit. And so let's take a look at TNX. So we'll take a look at yields, and we'll take a look at the VIX briefly. So yields, I think you could see this is the daily chart on the TNX. You could see that this is struggling where we'd expect it to struggle, right? After losing the SMA support, having these slope, the short-term SMA slope down, now it's going to come back up into there. If it tries to come back up in there, it should be met with resistance. So without, again, something really newsworthy that would change things quickly, this should have a little bit of a tougher slog. It did weaken, I think, the way we thought that it would, this and the DXY, and then we thought they would try to rally after that. I think that's where we left off last week, and I'm seeing that attempt happening now. I do think that this gets hard, right? When you start running into downsloping SMAs, like this is just all part of the corrective action. And then that's why often you'll see things take a while to really finally fight their way through and go back up for real. So it could take a while because it might have a lot of fight on its hands on the way back up. But that's curling back up a little bit. So again, towards the bears, right? A little bit of curling back up on yields, a little bit of curling back up on the dollar. But at the same time, we could counterbalance that with the VIX. And this is what I looked at this morning, trying to just prep for this and saying, now the VIX is kind of its own story this year too, on top of it. But that's not really, you would expect this, right? Coming up with a holiday. That's why Ryan, of course, has moved a lot of our services up in the week so that we could get some trades on that require, some premium, all right, that we can latch onto. But yeah, this is, you got to be cognizant of what's going on there. And that to me is not looking good. That favors, at the moment, you got to say that favors the bulls as well. So that kind of balances out against what we just saw in the other two, the TNX and the DXY. It is what it is. Let me try to look at one more thing up here. And as far as it goes, I've got a couple custom things that I like to look at, and they're a little more bullish that relate to the VIX. They're a little more bullish in terms of the market. So they're in agreement with the VIX chart itself that it looks pressured right now. Excuse me. It looks pressured right now. So, I would think that there's a chance, given what could happen here, this thing could come back down towards the lower end of this range we've been charting, and it hasn't been there for a while. But I guess you really just can't rule that out. And who knows what happens by year's end if they really do find a way to goose this. And remember, we talked about people being overhedged. We talked about people being underweighted. We talked about the seasonality. We talked about the pain trade being to the upside potentially. There's a lot of things. And I know I come off sounding really bullish right now. I'm just saying that I'm not really bullish in the grand scheme. I'm just looking at it and saying that there's the potential in these charts in my mind right now. So I think if you're a bear, I think something really needs to shift for you, or news needs to develop that shifts things, because right now I don't see anything that's imminent. We have to wait to see if we break down below those levels we discussed or above them. But if you break above them, you've got to go with it because that's the trend for now. But they're really close to taking control further, right? They really are. If something doesn't happen soon on the bear side, I'm trying to think. I think I had one more thing I really wanted to cover, and I'm trying to think of what that was, but I might have to try to sneak that in for sector situation because I don't think I can do all the typical macro things I do anyway. And we've probably ran long, but let me try to end on a kind of a summary note with the SPY, since that's our main proxy. And again, I still think you have to look at this and say, here's the move. There's where they stopped the last corrective activity on support, moved things up, pulled back up, found support again, somewhere near where you'd possibly expect there to be, the confluence of a couple of SMAs, tried to move it back up, stalled on an expiration Friday. And then now we have to wait and see. So again, I think you're looking at, 399-ish, right, is aggressive, right about there on the upside. And on the downside, I think you just have to wait for this low to get taken out. And so this is what I'll plan to do. And when I get back in the saddle, hopefully feeling better tomorrow morning for UA, I'm going to be open-minded, and whenever I can get us set up with some nice ideas, after we see some nice paper and some nice liquid names, especially for a holiday week, then we'll try to prepare on both sides of this market, not knowing what Wednesday's news will bring and what Jerome Powell will say. And again, I think that's what will largely dictate, as of what I know now, that's what will largely dictate how this week plays out ultimately, along with potentially thin holiday trading and so on and so forth. So I hope something I've been able to share with you in this video helps you out this week and in your future delving into the market. And I'll catch up with everybody in the other videos and stuff for this week. So everyone, take care.